Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to my podcast, episode 166, published on April 24th, 2026, titled April 2026 Sustainable Stock and ETF Picks. Now, before I begin, I want to apologize if my voice at any time sounds a little rough. This podcast is presented by Investing for the Soul. Investingforthesoul.com is your go-to site for vital global, ethical, and sustainable investing mentoring, news, commentary, information, and resources. Remember that you can find a full transcript and links to content, including stock symbols and bonus material, on this episode's podcast page at investingforthesoul.com/podcasts. Also, a reminder, I do not evaluate any of the stocks or funds mentioned in these podcasts, and I don't receive any compensation from anyone covered in these podcasts. Furthermore, I will reveal any investments I have in the investments mentioned herein. I have a great crop of 10 articles for you in this podcast. Note, some companies are covered more than once. Now, with so many articles to potentially cover, I've chosen 3 to quote from. Titles and links to the other 7 can be found on the web page for this podcast edition. My first article concerns a sector important to sustainable investing, wind energy. President Trump's antagonism towards wind energy is causing some investors to be concerned about the sector. However, many energy analysts believe that wind energy does have a great future. Hence, I'm beginning this podcast with a recent article titled Top Wind Energy Stocks to Buy for Long-Term Portfolio Gain on finance.yahoo.com. It's by Zacks Equity Research. Here are some quotes from the article. Starting with the first company, Duke Energy. Based in Charlotte, North Carolina, is a premier utility service provider offering efficient power and energy services. The Zacks ranked number 2 buy company is currently focused on expanding its scale of operations, implementing modern technologies at its facilities, as well as enhancing its renewable generation portfolio by investing heavily in infrastructure and expansion projects. Such solid renewable capacity maximization plans should enable the company to further bolster its footprint in the expanding renewable energy market. 2. Constellation Energy. Headquartered in Baltimore, Maryland, is a well-recognized provider of electric power, natural gas, and energy management services to 2 million customers across the continental United States. Constellation Energy operates 27 wind projects across 10 states that are capable of producing about 1,400 megawatts of electricity, of which about 750 megawatts are Constellation owned. This Zacks rank number 2 company is launching a $350 million initiative to increase the output and lifespan of its portfolio of renewable energy sources. 3. Consolidated Edison. Based in New York, it is a diversified utility holding company with subsidiaries engaged in both regulated and unregulated businesses. The company is involved in the regulated electric, gas, and steam delivery businesses across the U.S. The Zacks-ranked number 2 company is currently building the Brooklyn Clean Energy Hub, a transmission substation that will strengthen New York's power grid and provide the flexibility for offshore wind resources to interconnect to it during construction and after commencing operation. 4. DTE Energy. Detroit, Michigan-based, is a diversified energy company that develops and manages energy-related businesses and services. The Zacks-ranked number 2 company has been investing steadily to enhance its renewable generation assets. DTE aims to invest more than $10 billion in the clean energy transition over the next 10 years. The 50-plus wind and solar parks under this program already generate enough clean energy to power more than 835,000 homes. End quotes. This second article is also about energy stocks, but from an AI perspective. It's titled 6 Best Energy Stocks for the AI Power Grid Build-Out from money.usnews.com. It's by Matt Whitaker and reviewed by Rachel McVeary. Here's some of what they have to say. Note that 2 of these stocks focus on natural gas, and thus will not interest some of you. The computing power required for artificial intelligence is much higher than for conventional computing. For example, a ChatGPT search takes about 10 times more electricity than a traditional Google search, according to Canopy, a tech company that provides carbon footprint insights for websites. The compute and networking infrastructure being built to run current and future AI systems are increasing in both scale and power density, says John Campbell, Senior Portfolio Manager with Allspring Global Investments. AI data centers also need power to keep the rows upon rows of computers cool enough to keep working. Here's a look at 6 energy stocks that could power up a portfolio amid the artificial intelligence data center build-out. 1. Powell Industries, Inc. Campbell points to this energy sector electrical equipment manufacturer as a momentum play. The company has a $1.4 billion backlog of business, with commercial and industrial growth driven by data centers, he notes. He also points to expanding gross margins, improving product mix, good execution, and a strong balance sheet with effectively no outstanding debt and about $475 million in cash. Investing in Powell is not without risk, however, as shares are trading at roughly 31 times consensus forward earnings, which Campbell calls an extended valuation. 2. Array Technologies, Inc. This company makes ground-mounted motorized systems that help solar arrays follow the sun to maximize electricity production. It also may be a bargain, with its shares down around 27% this year, and Campbell calling it an out-of-favor opportunity. The company grew its revenue 40% in 2025 as order bookings hit a record and volume grew significantly, but its shares sold off because of a disappointing outlook for 2026, Campbell says. The increased demand for its product set is fueled by increasing grid energy demand coupled with the AI infrastructure build-out, he says. After the sell-off, the company's shares are trading around 10 times consensus estimates for forward earnings, representing a significant discount to its nearest competitor, Next Power Inc., according to Campbell. 3. National Fuel Gas Company. Turning to the extraction side of the AI energy equation, Campbell likes this natural gas producer, operating in the productive Appalachian Basin, that also gathers, transports, distributes, and markets the fuel. National Fuel Gas Company is actively positioning itself as a preferred partner for the massive power demand generated by AI and data centers, Campbell says. Risks for National Fuel Gas Company include relatively high debt and the capital-intensive nature of the regulated businesses. 4. NextEra Energy Inc. In December, this utility company announced an expansion of its partnership with Google, saying the companies would collaborate to develop new gigawatt-scale data center campuses across the U.S. NextEra's energy generation capacity mix spans what would be needed for AI data center build-out. More than half of this capacity is from renewable sources, followed by natural gas and then nuclear. The company plans to add up to 30 gigawatts of generation capacity by 2035 to help power data centers and artificial intelligence. That includes another deal with Google to restart a nuclear plant in Iowa. 5. Arch Rock Inc. Murillo also points to this natural gas compression services and equipment company that serves the U.S. oil and natural gas industry. Compressing natural gas helps it move from wells through pipelines to processing and storage facilities. 6. Energy Vault Holdings Inc. One drawback to renewables, such as solar and wind for artificial intelligence data center power, is their intermittency. They don't produce electricity when the sun isn't shining or the wind isn't blowing. To help smooth this out, companies are deploying batteries to store energy and release it when the renewable assets aren't actively generating electricity. Energy Vault develops, deploys, and operates utility-scale energy storage solutions, including battery, gravity, and green hydrogen technologies. Last month, the company announced a deal with battery manufacturer Peak Energy to launch energy storage architecture with lower cooling requirements and improved ability to handle high volatility power demands created by AI training and inference workloads. End quotes. Increasingly, sustainable investors believe that nuclear energy stocks are permissible in their portfolio. So I'm including in today's podcast this article titled The Top 3 Nuclear Energy Stocks to Buy Right Now from finance.yahoo.com. It's by John Bromos at fool.com. Now a few quotes. With the war in Iran pushing oil and gas prices higher, and the AI revolution contributing to higher electricity prices, alternative energy sources are looking pretty attractive right now. Perhaps none are looking as attractive as nuclear power, which has the advantage of not requiring constant refueling from unpredictable suppliers and the ability to be built anywhere. Here are the top 3 nuclear stocks to buy right now for investors who want to ride this exciting energy trend. 1. Oklo. Early-stage nuclear startup Oklo has already scored some big wins in its quest to make small modular nuclear reactors, SMRs, a reality. The company began construction of its first nuclear facility on the grounds of the Idaho National Laboratory in 2025 as part of the U.S. Department of Energy's Reactor Pilot Program. When completed, the reactor facility, dubbed the Aurora Powerhouse, is expected to generate 75 megawatts of clean power. Oklo is still in its pre-commercial stage, and there is still a lot that could potentially derail its ultimate commercial success, including regulatory setbacks and operational challenges. It's an inherently risky and speculative stock, and only the very risk-tolerant should even consider investing in Oklo at this stage, and even they should only invest money they can afford to lose. That said, for growth-focused nuclear investors, Oklo is a top buy right now. 2. NuScale Power. Regardless of whether nuclear power someday supplants oil and gas as a power source, the world may still be reliant on oil and gas for crucial petrochemicals. However, nuclear startup NuScale Power, which, like Oklo, focuses on SMRs, just signed an agreement that could help petrochemical plants become more energy efficient. NuScale is partnering with Ebara Elliott Energy, a manufacturer of industrial turbo machinery, to field test a commercial-scale, high-temperature steam compressor powered by NuScale's SMRs. If successful, these compressors could use SMRs to provide process heat for petrochemical plants. While standard light water reactors were previously believed to be unable to reliably produce process steam for industrial applications at a temperature of 500 degrees Celsius or higher, NuScale believes its SMRs are up to the task. If successful, this test could open up a massive new market opportunity for NuScale's SMRs. Like Oklo, NuScale is an early-stage startup that carries a number of risks for its shareholders. 3. Duke Energy. If you're not a risk-tolerant investor, or you aren't looking for a pure-play nuclear company, but instead just want to make sure your balanced portfolio includes some nuclear energy stocks, you might consider utility Duke Energy. Is the second largest U.S. utility stock with a $100 billion market cap, and it also has the second largest nuclear generation portfolio of any U.S. utility company. Duke pays a solid dividend that currently yields 3.3%, which the company has raised every year since 2010. End quotes. Now don't forget that I have titles and links to 7 more great articles showcasing sustainable and ESG-oriented companies and ETF picks on the webpage for this podcast. So these are my top news stories with their stock and fund tips for this podcast. April 2026 Sustainable Stock and ETF Picks. Please click the like and subscribe buttons wherever you download or listen to this podcast. That helps bring these podcasts to others like you. And please click the share buttons to share this podcast with your friends and family. Let's promote ethical and sustainable investing as a force for hope and prosperity in these tumultuous times. contact me if you have any questions. Thank you for listening. Again, I want to apologize for my voice sounding at times a little rough. My next podcast will be on May 29th. See you then. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.